Hey everyone, I want to talk about one growth stock that's down 81% off its highs. I think this growth stock is ridiculously undervalued, and the stock I'm talking about is DocuSign, the number one solution for e-signatures worldwide. I'll discuss why I think this stock is ridiculously undervalued when measuring by the forward price to earnings ratio. I'll look at its latest quarterly results, and I'll also show you its performance over the last several years. And I'll talk about some fundamental factors why I think this stock is poised for excellent performance over the longer term. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so I already highlighted that DocuSign is the world's number one e-signature solution. It has 1.5 million customers across all industries, segments, and geographies. Of course, DocuSign faces competition in this industry, namely from Adobe, which, by the way, I also recommend as a buy. But the industry is so small that I don't think it's going to gain many more entrants into it, right? The opportunity, DocuSign likes to claim this is a large market opportunity, but a $50 billion total addressable market is relatively small when you're talking about industries, right? So for comparison, the home improvement industry, that's a $1 trillion total addressable market. The advertising industry, another $1 trillion total addressable market. The worldwide travel, hotel, and resort industry, that's a $1.5 trillion total addressable market. So you're starting to see here that a large total addressable market, I consider it at $500 billion and above. Anything 200 billion and below, I consider it a small total addressable market. DocuSign's total addressable market is very small, in my opinion. It's not a large market opportunity. I mean, it's large when you compare it to its own revenue, right? It's on pace to deliver less than 3 billion in revenue annually. And when you compare 3 billion to the market of 50 billion, oh, there's a big gap there. But when you compare the market opportunity to other market opportunities, it's small. And usually when you have a small market opportunity, you don't face very much competition in terms of new companies coming in. Because when new companies are thinking about what industry to enter, they're thinking about these massive industries that they want to go into because those provide massive upside. There isn't massive upside in a $50 billion industry. So you're not going to gain very many new entrants. You're going to compete with the existing players, and that's Adobe, and that's a few others. But there's going to be room for a few of them in there, and they're going to settle out at some equilibrium that's going to be much larger than where it is, and the market is going to grow. The reason the market is going to grow is because e-signatures are so much more convenient than in-person signatures. Think of all the time that's wasted when you have to go in person and sign something. Which one of you would prefer to go in person to sign a document that you can sign through an email? If they just send you this e-signature solution, you open it up, you read it over, and you click and you sign. Or would you rather get in your car, drive somewhere, look for parking, go to the business office, and wait for them to greet you, bring you in, sit you down, give you the documents, you have to read it over, and then you sign, and then you have to go all the way back. Now imagine you're doing that multiple times per week. It's a major hassle. This offers a significant advantage. And for all of you who prefer to save the environment, think of how much paper is saved by signing documents electronically versus signing documents in person. So there's a strong tailwind behind this industry. It just makes sense to go electronic, and longer term, it's just going to be a tailwind. Now, there's going to be a small sliver of the market that will remain on paper, right? The highly sensitive documents that you need it to be highly secure and you want it to be in person. There's always going to be that. But routine contract signings that need to be done over and over again. They're not very, they don't need very high security. Let's do it over the internet, please. Let's not waste our time having to go in person to sign some of these things. So in their latest quarter, total revenue increased by 8%, but total billings increased by 13%, suggesting that revenue is likely to accelerate going forward. Operating profit margin of 25% and free cash flow of $249 million. If you divide the free cash flow with total revenue in the latest quarter, you'll notice that the company generates strong cash flow to sales. I like those kinds of businesses that don't need to reinvest large capital back into the business, because this frees up cash flow that they can give back to investors, and that's shareholder returns, right? You've heard me talk a lot about those industries that are capital intensive, that need billions of dollars of continuous investments and always needing to be upgraded and maintained, and that leaves little opportunity to return capital to shareholders. I dislike those industries. I like these kinds of industries with little capital investment required. Now, longer term, you can see DocuSign's cash flow from operations absolutely soaring. In 2019, it generated roughly $100 million in cash flow from operations in a trailing 12-month period. That's now all the way up to $979 million in cash flow from operations in a trailing 12-month period. The company has similarly done an excellent job expanding its operating profit margin up to 2.25% from negative 30% in 2019. Now, this margin, I expect, will continue to move upward and to the right as the major investments in the business, developing the technology, the research and development, has already been passed. The peak phase of investment has passed, and now it's time for just maintenance upgrades, just iterations, adding few product cycles here and there to improve. But for the most part, this is the time for DocuSign to reap the benefits of the investments it's made. Hire some knowledgeable salespeople to make sure you sign these contracts, explain to businesses why it's in their interest to move to e-signature versus in-person, and sustain your capital advantage. And finally, DocuSign is trading at a cheap valuation. Like I mentioned, a forward price to earnings of 17.31, which is cheap for a business that's going to or likely to grow revenue near double digits with expanding cash flows and expanding operating margins, operating in an industry that's got a strong tailwind behind it with relatively few fears of new entrants coming into the industry, because it's not like a very attractive industry that's going to get all of these new companies coming in to try and take advantage of, oh my God, this industry is so profitable, let's all jump in here. Look at what's happening with NVIDIA. NVIDIA's profit margins are so exciting and so exponentially large that they're facing so many new competitors. Everybody wants to make a graphic processing unit now, right? Because the profit margins are so lucrative and the opportunity is so large, it's just going to face a stream of new competitors coming in. That's not going to be the case with DocuSign, a relatively small industry with niche players. There's going to be competition within the existing participants, but it's not going to face increasing competition. So for all those reasons, I think DocuSign is an excellent stock to buy, and I'm updating this recommendation here on May 20th. And this is just my list. I keep track of all of my buy recommendations, hold, sell, all of that, and I update them regularly. So if this is something you'd like to see, stay tuned on my channel. I reference this spreadsheet all of the time during usually every one of my videos. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.